Hello, everybody, and thanks as always for tuning in again to another update on the continuing saga around the Broadcom VMware acquisition. Big news today, as of November 21st, the acquisition has finally received clearance from the Chinese Regulatory Authority, which comes on the back of the U.S. and China meeting over a variety of issues out on the West Coast over the last week or so. Coincidental timing, I think not. They likely had some type of handshake agreement, I suppose, that worked out well for whatever it's worth. It seems like things will close as of tomorrow, the 22nd of November. So not a ton of updates on our end, aside from what we are continuing to harp on for our clients who are affected, and will either be staying on board with the combined companies or leaving VMware and seeking opportunities elsewhere. Three things that we're discussing and think are really important right now is obviously in the coming days and weeks, we should get clarity around the stock payout. So, as it was publicized at the end of October, I think it was up to 96% of VMware shareholders had elected for Broadcom stock as their election preference. Obviously, that's cannot be honored based on the terms of the agreement. So instead, it will be closer to, from what I saw, a 52% payout to Broadcom stock and 48% to cash is what I saw. Whether that actually is the final exact specifics or not is, I guess we'll find out. But that'll be a tax event for a lot of folks. So what we're doing, and we normally do in general for all of our clients at this time of the year, is we're putting together tax projections for them. We're looking at last year's 2022 tax return, comparing their pay stub and everything they have year to date, all of their income tax information for 2023, putting that into a blender to figure out how the payout will affect them. If that's something that you think you would benefit from, we're offering a complimentary consultation on that tax situation as well. The other big item that is to be determined, and I suppose folks for the most part will fall into one of two camps. Either you will receive severance in some capacity, of which the details are still a little fuzzy on, if you're leaving the company. And whether that takes, obviously, that'll be a taxable event if it takes place in 2023 or the beginning of 2024. So, how do you plan most tax efficiently around a new wrinkle in your potential tax situation? So, we're keeping an eye on that for everyone who would be receiving severance. And on the flip side, for those who are staying with the combined entities and have received an employment offer with details, for what we've seen, a lot of them are a little more equity heavy, a little less cash compensation heavy. And as a result of that, how does that affect more broadly your financial plan? If you're going to have vesting over the next 4 years at an elevated schedule, but lower cash compensation, how does that affect your cash flow? How should you be thinking about it? How does that affect your tax situation for this year as well? Because I believe a lot of them will be vesting as early as December 15th is what's been rumored. So a lot going on. A lot more details are on the short horizon finally. It's good to see some finality and closure. I think everyone would agree to the sort of period of limbo we've most recently been in. So if you'd like to take advantage of any of these consultative services, please reach out to us. And for our clients who are receiving this message, I suppose you can disregard to some extent since we are proactively having these conversations already. But thanks as always for watching, and thanks to everyone who's been watching a lot of these videos over the last couple, I guess, year plus. I'll continue to do them as we have updates, and I hope everyone finds them somewhat helpful. So thank you again.